and make sure that we understand. Okay, question 2, close cooperation. It's important for us to make sure that we highlight the important information. Just before we continue with the close cooperation, I just want us to talk about the equity part of it. Okay. Most of the things are the same, but we need to make sure that we know that when we contribute capital under close cooperation, we don't call it capital, we call it what? Members' contribution. You see now? So let me just put it down here, just for the. So when we are under CC, capital is called members' contribution. Okay, that's what we need to know. We must make sure that we know that, because if you call it maybe capital, you will be penalized for that. So we call it. Let's wait here. Yes, members' contribution. Okay, sorry for the members spelling, but it's okay. Members' contribution. And then other things will remain the same. But because of time, I'm just going to go through the question just to save time. Just to save time. Bless you. Yes. So now, let's go and check the information. This is the close cooperation. Just have this. We've got 2 members. We've got this one, Mawali and Lassen. And then currently, this one has got 70, and then Lassen has got what? 30%. And they gave you the contribution. When they say contribution, they mean members' contribution. They mean capital. So each one has got contribution. As you can see, Mawila has 300,000, and Lassen has got what? 80,000. They're just telling us, because members need to have a share in the business. As you can see, these shares must always add up to what? 100. So as you can see, this 70 plus 30 is 100. Okay, no problem. Let's switch over. They gave us, as you can see, they gave us the list of balances. Yeah. So they said the dates are very much important here. They say our accounting date is 31st of what? December. This means that we end our year every year on the 31st of December. Meaning this year will end 31st of what? December 2019, for example. So, but every year we end our year on 31st of December. But here they give us the books when. It's important to know the date. 31st of is important. So they gave us the trial balance. They gave us what? Members' contribution. Remember I said it's the same as capital. It's just that under close cooperation, we call it what? Members' contribution. If I may ask you, what is retained earnings? What is retained earnings? The profit that is remaining. This is the remaining profit in a nutshell. So it means it's the profit that we retained in the business. We call it remaining profit. Remember, under close cooperation, the remaining profit is retained. Okay. Unlike this is the remaining. Unlike the partnership. Partnership, when we see the remaining profit, what do? We share. So the other term for the retained earnings is undrawn profits. Okay. So now they give us the mortgage bond, the loan to Klassen, the land and buildings, and the bank. So that those are just the balances given to us. Okay. Let's switch over and check information. Yes, they gave us some information here. We need to make sure that we get through this. They said on the Just keep it. They say, this is important now. They say 2018. So we need to note the year. So we need to know that 2018 is what they're talking about. We're under 2018. They say on the 31st of December, 2018, Muila, meaning one of the members, transferred how much? 20% at a value of what? 42,000 to class. So it means during the period, which is 31st December 2018, Mawila transferred his share to Klassen of how much? 20%. We call this internal transfer. What do we call this internal transfer? Because one member bought from the other member. So this is called what? Internal transfer. So meaning the internal transfer will affect the current interest. Remember the current interest is 70 and 30. Okay, but don't worry, I'm going to show you how to find a new interest. Because if I sell to you, meaning I'm not going to have 70 anymore if I've got 70. I'm going to have less because I'm giving you the other share. Does that make sense? So remember, for now, we're just analyzing. We're going to come back to this. Okay. They say Muila. Why do I say Muila? Mawila. Mawila lent what? Close cooperation, how much? 40,000. Can you see now? So what do they mean? It means this is a loan from a member. We call this, let me just put a text, loan from a member. Remember, we're just analyzing. So we've got a loan from a member, yes. They say on the 31st of December, the land and buildings was revalued, okay? To at how much? 350. So this means that if we revalue the land, it's like sometimes they can come to your house and they say, can we please value your house? Let's say you bought it for 1 million and they value it to 1.2 million. You get how much? Yes. So what we want to do, we have to go and check the balance given to us. Please quickly go and check from the list of balances, the balance that is given to us for land and building. 480. But here they said it was valued at how much? 550. So 550 minus 480. Do you think we gained? Yes, how much did you gain? The difference. Use the calculator. Remember, just analyzing here. $550 minus 480. 70,000. So this is a gain, but because it was revalued on the fixed asset, so this 70,000 we call it a reserve. We call it a revaluation reserve or surplus. It's up to you. We call it a revaluation reserve, or you can call it a surplus, and then it is part of what? Equity. Remember, under close cooperation, we call equity funds. So wherever you see the word fund, just know that they are talking about equity. So I'm going to call it what? Funds, or you can call it equity. Okay. So this is going to be very, very useful by the time when we record. Okay. We're just analyzing it. Okay. So let's make sure that we understand it. We're just analyzing the interests. Okay. It's for this one. Are you okay? They say all the interest was paid and received. So in other words, they said, okay, they paid all the interest which were applicable. No problem. Now, let's check the other thing. They say the interests, the retained earnings, remember it's the same as what? Undrawn. They said for which year? Year ended. They say it was how much? 230. If you can remember very well, when we started from the beginning of this question, they did mention, let me try to go back. Let me go back a bit so that I can show you. Here, if you can check, there's a retained earnings here. Can you see this retained? This one. Of how much? 1. So now it was 2017. Now it is, they say it's how much? 230. Meaning that one we don't have to worry about it anymore. It changed to 230. So the one that we're going to use now is going to be what? The 230, not the previous one. But if, let's say, for example, nothing changed, we're supposed to still use what? The previous one. Does that make sense? No problem. Remember, we're just analyzing so that when we start recording, it becomes simple. They say the distribution of income equals to 50% of what? Undrawn profit. So in other words, this is only where we're gonna, if we distribute to, remember under CC, we can distribute some of the profit to members. So they say when we distribute, we're gonna say 50% of what? Of undrawn. At the moment, what is the undrawn amount? It's 230. But we're not gonna do it now, we're just analyzing. So this is the information that we're gonna use to answer the question. So if you can check the question, they want us to calculate what? Changes in interest. So this is the first thing that I'm gonna do. So we're gonna use a table to calculate. Let me ask you a question before we continue. How much is the current member's interest in the business? How much is Mawila? Mawila has got a certain percentage, and how many percent? And then the other one is 30. Thank you very much. So we need to bear that in mind. So now we're gonna check after the transfer, how much will be the new interest? Are we okay? Let me just erase this. Okay. Now the second one, they want us to calculate what? The change in members' funds. I'm gonna come back to this. As you can see, this one has got many marks. And the last one, they say net value of members' net investment. So the first thing that I'm gonna do, I'm gonna deal with this one. I'm gonna deal with the first one, this one. Members percentage. So here is the table that we're gonna use. Firstly, remember I asked you currently how many percent? 70 and Klassen? All in all, this is before anything happens. Are we together? But if you remember, if you can go back to the question, how many percent did Mawila transfer to Klassen? 20%. Can you see now? That's how we say internal what? Transfer. What do we say internal transfer? Because one member bought from another member. We call that internal transfer. That's why here we say what? Internal transfer. Okay. So now, how can we transfer? We said 20%. We're gonna say, because Mawila transfer to Klassen, 20% of 70. Can you see now? We say 20% of 70. We get what? Can you see the reason why I put it in brackets? Because I'm taking it out of Mawila to Klassen. So I'm gonna give Klassen what? 40. You can't, because the 20% is the 20% of the business, but from what? The member. So it doesn't mean that the 20% from the business is the same as the 20% from Mawila. This means that 20% of the CC as a whole is equals to 14% of Mawila only. So don't go and minus, you just have to multiply. It's a little bit of mathematics here, but yeah, just know that you cannot just minus because they're not saying 20% of what? So they say 20% of the CC, but from, of the CC from Mawila. So meaning 20% of the CC is equivalent to 14% of Mawila. And what is the new interest? 56. Okay. And then the other one, 44. You know how we found it? Because we took this one, we gave this one. So their new interest is how much? 56, and the other one is 44. And it must add to what? 100. That's how we calculate the new percentage interest under the internal transfer. So we answered. Now, the next requirement, they asked us for what? Changes in members' funds. They want us to calculate what? Changes in members' what? Funds. So we're not going to deal with the percentages, 70% and 30% anymore. We're going to deal with the real money. So remember, funds are the same as equity, I told you. Yes. Now, what we need to do, as you can see, I just put already, we need to put the funds. So what you can do, maybe to make everything simple, you can just say here, let me put a text. We can just say on top, just so that it can make sense. You can just say these are the existing funds, so that it can make sense. What do we mean by say existing funds? These are the given balances. Yes. So we have to go and check how much is the member. If you can go back to the question, members, I think the members' contribution is given. Where you saw those percentages, where you see 70% and 30%, can you see in the form of amount 300 belongs to Mawile and Klassen is 80,000? You can go back and check where the question starts. If you add them together, you get how much? 38. These are the given figures. Can you see? They are from, if you can check here, let me quickly find it so that we can understand better. It's where the question starts. This one. Amount. Now, let's go to retained earnings from the question. Remember they give us the retained earnings? And I told you that it changed. So it is given to us as 230. 230, but we need to share it according to that 70 and 20. And 30, yeah, 70 and 30. So what is, can you see? 230 times 70? 161. 230 times 20 times 30? 69. Can you see now? So please don't use the ones that we calculated from the first one. They were just trying to show how much will be the new percentage. So you still have to use what? The 70% and 30%. Okay. Remember when we analyzed, we said we made revaluation reserve when we were revaluing what? Land. And how much did we gain, if you remember? And we said, I think we said 550 minus 48. So this is what we did. Can you see? We said 550 minus 48. Okay? And we got 70. And again, this 70 must be divided like the other one that we divided, using what? 70 and 30%. Okay? So you're not gonna say 70 times 70%. You give Mawila 49. 70,000 times 30%. You give Klassen what? 21. You see now, where you only given totals, you must share, unless if they shared for you already. Okay? Will you remember this? Now, what do you need to do? Because I didn't, let's find the totals. I'm gonna find the totals here. Please add for me. Do you have a calculator? Add for me from a winner. It's 300,000 plus. Let me just check my calculator. $300,000. 61 plus 49. Do you get 510? I got 510.
Why can't you go to recorded under the changes?
No, changes, remember, it's like PPE. We're still at the beginning there. We're gonna go to the changes. So the changes is when we are gonna try to take from one guy to the other. Yes. Please, let's try the total for the other guy is 80. It's 170. 170,000. What about the total? 80,000. You see, that's how to put what? Balance. Any question? Is then that we can go to the changes themselves. Can I move on? Now, remember when they say changes were as follows, né? Let me write something. So on these changes, I'm gonna write to make it simple. Is when we had what? Internal transfer. Because the changes were there because of one member bought from another member. So who bought from whom? I think Mawila transferred to Klassen. So Klassen bought from what? So it means we're gonna take 20% because he bought 20%. So what we're gonna do, we're gonna say, we're gonna deal with this one by one. The members' contribution, as you can see here, we're gonna deal with the members' contribution first. We check how much is the members' contribution here on top. We're gonna take 20% of this and give it to what? So I'm gonna do this. Can you see now? I'm gonna say 300,000 times. I take it out, I put it in bracket, and I give it to Lassie. Can you see how does it work? So we're gonna deal with these things individually. So we need to make sure that we deal with them individually. So that's why now I was focusing on the members' contribution. I just said 20% of this 300,000. The same applies to retained. The retained here for Mawila is 161. I must take 20% of that. Can you see now? I'm gonna say for Mawila retained earnings. Can you see 161 times? I take it out and I give it to Lassie. The same applies to revaluation reserves, 49,000. I'm gonna multiply it by what? 20%. 20%. I take it out, I give it to the guy. That's true. And now we can find the new funds. We can just say 510. Can you see here we've got 510 here? We minus what? We minus this, and then we get 408,000. I'm not sure. Can check. The other guy we add, 170 plus 60 plus 32,200 plus 9.8. According to my calculation, I got 272,000. For age, let's see, double check. 510, 3 minus 60, 3. No, I get 408 because we are minusing, you're not adding. It's okay, don't worry, let's not worry about the mathematical part of it. As long as it makes sense, but I got the same amount. And the total obviously is going to be how much? 280 because we only have 68. This is the changes in members' funds. Can you see now? For the internal transfer. Are we okay? Okay. Let's go to the next requirement. The next requirement, they want people are happy out there. So they want members net what? It's very easy, you'll see. What you need to do, you just have to go back. Let me go back. Let's see. This means, let's understand this before we record. If let's say, for example, we stop the business, or maybe one of the members decide to go, want to check how much do we owe each member. Currently, if I go back, currently we owe, check here. We owe Mawila how much? And we owe Klassen how much? You see, these are the only transactions that we have with them, we will pay them this amount. But unfortunately, we still have other information that will affect what? These totals. So what we need to do, we need to go and we start with this. Can you see this? We take this 48272. We start with them here. This is what we owe to them currently. Does that make sense? But remember, we said sometimes this is not a detailed statement. It's just a short, an abridged statement, if I can call it like that. We said we can have loan to members, meaning members, the business can loan money to the members. And then we've got loan from members, meaning members can give loan to the business. So because let's talk about the loan from members, meaning the business owes that loan to members. It's a liability to the business. But loan to members, meaning the members owe the business, is an asset to the business. Now let's check it. Loan to members. So you have to check out of the two members, the business loaned money to one of the members. If we go back to the question, let's check if we've got any loan to members. Because I think we've got loan from and the loan to. So I think we do have loan to members. How much? It was to who? Which guy? To Klassen. Okay. We loaned, the business loaned Klassen 10,000. Let me ask you something. Let's say Klassen decided to go. We were supposed to pay him 272. But now there's a loan. This loan is owed to the business by Klassen. Do you think that loan must increase Klassen's amount or decrease it? Because he must give us the loan before we pay him. So that's why I'm going to go there and take out what? 10,000 from him. Does this make sense? Do you have any loan from members? From? Just go and check. Yes. Can you see where they say Mawila lent on the information there? Number 3. They say Mawila dot number 2. Mawila lent. And I even wrote, remember there, I said it's a loan from member. So meaning this loan is owed to Mawila. Do you think that I'm going to add it to Mawila or less it? Because we owe him, we must also pay him back what? The loan. So that's why I'm going to add how much? And then the total is how much? 40,000. And thereafter, we just have to add everything and we pay them. Now, we owe Mawila how much? 448. We owe Klassen how much? 262. Does that make sense? Yes. This is the members net investment, but not a detailed one, because a detailed one is too long. This is just a short one. Are we okay? So this is the close cooperation so far.